welcome to BQ Prime. I'm Hiraldaria. Overall, if you see in terms of markets, the pressure continues today. In fact, yesterday we did see a gap down opening, but we did see a good recovery that did come in the second half of the trading session. However, a lot of stock-specific action is what we are witnessing in trade. To discuss a couple of counters, joining us on the show today, we have Sanjeev Hota, Vice President, Head of Research at Sharekhan, joining in. Welcome to the show, Sanjeev, and a very good and a good morning.
Good morning and thank you for having me.
Always a pleasure. Sanjeev, my first question coming to you is with regards to a Kirloskar oil. Yesterday, we did see a good trade coming in on that counter. Today, not major moves coming in there. What's your move on this stock?
So this is one of the stock which is looks very good in terms of the valuation. So if you compare Kirloskar oil with the companies such as Cummins India, which is trading at 35 times forward, Kirloskar oil, whereas is trading at almost 18 times FI25, and if you exclude the NBFC arms valuation, which is almost at 65 rupees per share, so the valuation looks very reasonable. And this stake sale by one of their promoter, that the name by Kulkarni, has now sold off their stake in the company. So it was a big overhang on the stock, and now the window is clear. And if you look at some of the big buyers' name in the block deal that has happened yesterday, I think stock has a good room for outperformance going forward, and the big re-rating can happen in this stock.
Right. So that's a re-rating candidate that could be on the offing as well. But do you think, from a valuation perspective, it's good entry levels?
Yeah, definitely. If you see, as I said earlier, the 18 times forward earning is not much. It's almost trading
Mhm.
at 40% discount to Cummins India, which is mostly into the similar kind of business. So if someone is having an investment horizon of next 1 or 2 years, definitely Kirloskar Oil Engine offer a very reasonable kind of valuation at current level.
Right. Moving from there on, Kirloskar Brothers also has been in focus. In fact, today the stock is up around 2.5-3% in trade. And if you see in the last five trading sessions, it's up around almost 7%. Overall, what's your view on the Kirloskar Brothers? Because clearly, from a fundamental basis, if you see in terms of the debt profile of the company, that is very low. Their working capital cycle also remains very low. So overall, a lot of operating matrix which fit in. Sanjeev, I'm sorry, but we're not able to hear you.
Can you hear me now?
Yes, I can hear you now.
Yeah, so for the Kirloskar brothers, also the narrative is the same. The some of the listed peers like KSB Limited, which is the MNC company, is trading at almost double of the valuation what Kirloskar brothers is trading at. They are into the pumps business, and they are one of the leader in the domestic market and the good exposure in the global market as well. And it's trading at 11 times forward earning. So definitely big room for here also for Kirloskar brother to get related from here on, because 27 kind of at CAGR we are expecting from FY23 to 25. And as you said rightly, the balance sheet is very strong. They have
Hmm.
a lean balance sheet that is nil. So every ingredient is there for Kirloskar brother to get related from the current level.
Right. So that's with regards to where Kirloskar brothers go. Moving on, textile companies have been in focus as well. Firstly, the way cotton prices have inched lower, that is something which is actually turning the tide in favor of textile companies. However, export-oriented textile companies, probably there could be concerns on that front because we've heard from brands like Home Depot, etc., in the US, which have clearly indicated that there is some bit of softness coming in.
Oh, so you rightly put it, what is happening in the sector. So for there are two part of it. Firstly, the home textile, there could be a possibility of paying for another 1-2 quarter,
Hmm.
because most of the big retailer in US are doing the correction in the inventory. So that will take some time. But when it comes to the garments, if you see, that part is doing great, and the order book of most of the companies are at very good level. So what I see for the textile as a whole for this sector, one is that the cotton price is going to soften in this year because of the deficit. because of the higher supply, and there will be, at least for the Indian market, there will be a higher supply for the cotton, and the prices are expected to be softened. And secondly, if you see the valuation of some of these companies like KPR Mill or SP Apparel, or even for the Gokul Das Export, the valuation are much below what they used to trade at historical level. So when the earnings are, which are expected to improve by Q2 FY24 at that kind of quarter, so I believe this is the right time to start buying into this stock, but at a staggered manner, because for next 12 to 15 months, I see most of this the stock is going to outperform significantly from the current level.
Right. So that's with regards to textile companies. Moving from there on, overall, what's the view that you have in terms of ONGC as well? Because overall, if you see in terms of ONGC, now that they've actually partnered with Total as well, what's the visibility that you have, the way crude prices are panning out from here on?
So crude prices are more or less has now stabilized. The problem with ONGC, what I see is that this year they are going to clock the highest ever earnings. And
Hmm.
from FY23 to 25, if I tell you correctly, from FY24 and 2025, their earnings are going to taper off from the current level. Because if you see the current gas price at 8.2 MMBTU, it is going to be lower to 6.2 MMBTU. So that is going to take a toll on their earnings.
Hmm.
So that is the reason I'm not very convinced on the ONGC from the current level. So one could avoid ONGC and could preferably shift to some of the companies like Gujarat Gas or GSPL, IGL and MGL, where the regulatory tailwinds are there and the valuation is there also is much reasonable for as far as the earnings are concerned.
Right. And if you have to put a view in terms of Gale, what would that look like? Because we did see a block deal in today's session. Plus, the gas pipeline tariff revision process is on schedule as unification moves concurrently. So, taking that aspect into consideration, how do you think Gale will be impacted?
So for the gas transmission business, which is the large part of their business, are not doing well because of the global headwinds.
Hmm.
And so recent upmove that we have seen in GAIL was largely because of the 41% revision in the price in the what the GAIL ENGRB has proposed. So that is going to give a like earning uptick of almost 10-11% for GAIL. But when it comes to the majority of the business, which is the gas transmission, gas trading business, which is not doing well. So I'm not very convinced about the gain from the current level as far as the outperformance goes. And my bet could be more on, as I said, on the IGL, MGL, or Gujarat Gas, perhaps, than the ONGC or the GAIL of the world.
Right, so that's with regards to where GAIL goes. Moving on, PSU stocks are in focus as well. Firstly, you have a Hindustan Aeronautics on the back of the order wins that we've seen. In fact, all of these counters have been buzzing since the time we had the Aero Defense show in the month of February in Bangalore as well. What do you make in terms of HAL taking into consideration the pipeline in terms of order wins and the execution capability from here on?
Yeah, for the defense sector, if you see, is one of the structural sector which I see for let's say for next at least 3 to 5 years, they are in a cyclical upturn,
Mm.
and the kind of thrust government is having for the Atmanirbhar Bharat or manufacturing all the most of the defense equipment in India itself is
Mm.
going to give a big tailwind for the all the defense manufacturers which are there in India, and HAL is one of the prominent player here. And we have seen, despite the fact that in the budget, we have seen a moderate kind of 6% hike in the defense budget. But post budget, we have seen the many orders are coming from the government, and the kind of commentary from the government is giving more kind of confidence to the street for the HAL. And so stock is trading at only 18 times forward. So it is like a company which is going at almost 25-30% CAGR. This
Hmm.
kind of P is the room for a big re-rating from the current level as well. So it's a good company to have for in a portfolio for next 2-3 years.
Right, so that's with regards to a Hindustan Aeronautics. Moving on, in fact, NTPC has seen a good run over the last couple of trading sessions. Even from a derivative perspective, if you see the kind of open interest addition, a lot of long positions that have been created on that counter. How do you see NTPC?
So for the NTPC as well, it is, if you see, they've announced the green energy this demerger. So that is going to add to the higher dividend payment from the NTPC, as well as more kind of thrust on the green energy. And as far as we have seen the kind of summer currently, so there might be a possibility of elongated summer going forward. And NTPC at the current valuation of almost one times forward book value and 4 to 5% kind of dividend yield offers a very good kind of entry point for the investment. And the valuation, as I said, is very reasonable, not even for NTPC, also for the power grid at 1.2 times forward book value. This two stock can be a good play for the summer this season.
Right. So NTPC as well as Power Grid, both these counters that we should be considering from the PSU stocks as well as and Hindustan Aeronautics, as Sanjeev mentioned. Thank you, Sanjeev, so much for joining us on the show and giving us those views on few of the movers and shakers in trade today, as well as companies which could be long-term bets from here on as well. Thank you. Stay safe and speak to you soon again.